Welcome to StockOdds Odds and Podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Not too bad. I'm thinking we should be more like Russell Brand, right? Like all the millions of people listening to us, and we're so glad you joined us. We got to get really excited, Dave. We're kind of blasé. You know what I'm saying? How are we going to run a podcast if we're not like excited like Russell Brand, huh?
That was my excited voice. So what are you talking about?
Oh, that. Okay, well, I think we need help. We need some help. So, anyways, thanks for asking. Doing great. And why don't you let us know what's on the docket this coming week for economic reports and for any stock earnings? What do we see here?
Yeah. So there seems to be a theme of housing information coming out this week. On Tuesday, we have the Case-Shiller Home Price Index, consumer confidence. Wednesday, we have pending home sales. And then on Thursday, we have initial jobless claims, GDP, and then Friday, personal income. So the theme is how housing is doing, how the consumer is doing. Is personal income still going up or going down? And GDP, how the economy is holding up. So those are the themes in terms of the economic reports. And then we have a couple of key earnings. On Monday, Carnival Cruise Lines, that'll show us how the consumer is holding up as well. PVH is in retail, kind of consumer discretionary. And Tuesday is an important one, Micron, that can move the chip stocks or the NASDAQ itself. And we have Walgreens Boot Alliance, so that could affect healthcare. And we have Lululemon. So there are some noteworthy ones throughout the week. But I think Micron will be the big mover for the week. Yeah, that's it for the earnings and economic reports.
Okay. So we want to recap a little bit of what happened last week. I mean, Friday ended up being pretty good rally day after Thursday's sort of back and forth action there. But interestingly enough, with that rally that we had, the utilities and real estate, were kind of dominant. Whereas even on some of the other days last week that were concerning, like more risk off, utilities, were in the dump, right? So for the week, real estate was down 1.16%. That makes sense because of the banks and all that kind of stuff going on. There was some banter about, how bad the mortgage problem is and so on, and that the stress on banks and things. So, but utilities was kind of an interesting one. Didn't you find that intriguing how badly it was performing for the week until, of course, Friday? Mm-hmm. But even then, after Friday's 2.78% performance, it was still down for the week 1.13. Mm-hmm. So I found that kind of an anomaly in the sense of a risk off. I mean, overall, the market did manage to move up, but it just seemed that, we had a lot of concerns, and you would think utilities would perform a little bit better. So
real estate was the same way. It was down pretty strong for the week.
I know.
Friday just happened to have a...
Yeah, exactly. It was down 1.16% for the week, but Friday accounted for 2.42% rally. So yeah, it really came back from the dead there. Now, interestingly enough, we've been marching through the month of March, and we were going into the last week. So how have things done for the month so far? Financials down 10.41%, but for this week, financials were only down 0.83. So really, we've had a lot of damage done in the financial sector this month. Real estate 9.51% down for the month, and for the week, real estate, like we mentioned, was minus 1.16. So it's been a bad month for those interest rate sensitive and banking related things. Energy also has really had a rough go this month, but started to pick up slightly for this week. So for the month, it's down 8.75%. And for the week, it came in as a positive 1.43.
Do you think this is exhaustion in the selling, or just a
Yeah, it might be. I'm kind of favoring energy at this point a little bit, similar to what's been happening in the metals area because of we've seen a bit of a flight to the metals, as same as a flight to Bitcoin, because of the banking issues. So it doesn't mean it's sustainable. It just means it's what happened here recently. So running through the 1 week performance, technology. Well, actually, the leader from all the 11 sectors was communication services at 3.12, and technology at 1.82. So if we flip to the map of the market for the week, it looks like Apple contributed for the week 3.39%, Google 3.51%, Meta 5.32%, Tesla 5.71%. So again, some major standouts here. NVIDIA 4.10%, Accenture 8.8%, Into 3.84%, Oracle, like usually the boring thing, 3.23%, Adobe 4.70%. So these have all been contributing to this week's tech performance, along with the communications is where you find Meta and Google. And even Netflix is in communications. That was up 8.2%. Activision 6.84%. So this theme that we started on this year with tech being gobbled back up after having such a bad 2022, we have had a little bit of the occasional pause on a particular day or a couple days, but for the most part, technology is still being accumulated over, I would say, largely over everything else. So it's not a year of flying into the defensive. That was last year. It's not a year of flying into only low PE multiples. That was kind of last year. But this year, they're embracing stuff that, has higher PEs, is still more speculative. And I think it all relates to this expectation that we're coming to the end of the interest rates hiking cycle, that it has been working to some degree. And the markets are obviously always hopeful, as we saw with the Fed announcement, right? The rally that we had on Monday and Tuesday and a bit into Wednesday, just this, this anticipation of the Fed having to, pivot and go easier on the markets related to interest rate hikes. So again, we don't know how it'll all play out, and anything that's not done to tackle inflation will probably just kick it down the road farther, right? Mm-hmm. So again, just looking at the groups here for the week, consumer defensive came in third at 1.73, healthcare at fourth at 1.67, basic materials 1.57, and that's basic materials are going to be related to the dollar more so. And then energy 1.43, financials 0.83 after all that. And then industrials and consumer cyclical, in the green, but just very, very slightly. So we're thinking about, what happens this week. And so let's roll over to some of the seasonality aspect, because this is a full week. The 5 days at the end of the month, 5, 3, and 1 all fit into this week. So it's not split by a weekend. Mm-hmm. And so I think it's a really good opportunity to focus on what does the seasonality say? Well, how does March generally end? Now, granted, some of the seasonality on individual stocks and even the market to some degree, was affected by March and April of 2020. We had such a massive move down and then back up. So there is some concern that the data is heavily influenced by March of 2020, what happened at the end of March. So you might want to look at that and factor that in. But anyway, let's roll into that. Give us some of your observations there, Dave.
Yeah, we have the 3 seasonalities this week: the 5-day, the last 3 days, and then the final day of the month. When we look at the last 5 days of the month, from the short side, we see gold and silver, GDXJ, GDX, GLD, SLV. These are all showing up as weaker. And things like real estate, XLRE, oil, XOP, IYR is real estate, XLU, XLP, and even the small caps, IWM, a little bit more bullish. So for the full 5 days, that's what the almanac's showing. When we look at the last 3 days, we still see gold being more on the short side, GDX, GDXJ, and GLD. And also the banks, KBE, KRE, so the regionals, as well as XLF. So financials a little bit more short, and energy, and longer things like biotech, XBI and IBB. And then for the final day of the month, it's a bit of a mixed basket here. Longer things like oil and biotech and the ARC stocks, and shorter things like, again, financials, KBE, KRE, XLF, the home builders, XHB, and IYR. So I think the theme is being a little more shorter financials, being shorter gold in this last week here, and then especially that last day of the month. It tends to be weaker anyway. So.
Well, there might be a little bit of this battle between financials and gold, like we said. If there's more ripple effect to hit, now there is a potential, merger of First Citizens reportedly nearing deal to acquire Silicon Valley Bank. There might be other consolidation. There might be other things put forward in terms of shoring up all of this. But there also could be more things that hit the fan, right? So, we're not out of the woods. And I think that what we saw was when the banks were really under pressure, that there was some flows into gold. So that would be the contrast there, right? So I don't know if I would be gung-ho to be short both of them. But let's see. Let's be prepared. We know what seasonality usually does at the end of March with gold, so we can keep that in our watch list. Let's go into what the futures are doing here right now. So back to the S&P. Well, let's start with the Dow Jones first. It's up 0.35% or 113 points. When the futures opened, it did rally right away, pretty much right out of the gate. Looks like. Let's see here. Yeah, it did. It pulled back from its highs, so it was up more. It's pretty stable right now. S&P futures also rallied and pulled back a little bit. They're up 13.75 points or 0.34%. NASDAQ up 26.75 points or 0.21%. Russell up 9.7 or 0.56%. So that's up the most out of the four. The VIX is up slightly. It pulled back a lot on Friday, of course, with the rally. But it is up just slightly at 0.11%. Now, what's interesting is related to these four markets here. When you look at the daily chart over the long sample here and see how we finished with the Friday move, the diamonds are kind of stuck right in the middle of a 2-week range. And you've got the SPY also more in the top third of its 2-week range. Now you got the Qs, which are right at the top end of its two-week range and still looking relatively strong, like it could walk up the upper Bollinger Band and continue to go higher. I mean, it did make a pop through the February 2nd high and then pull back. And then we saw it pop up there again and pull back. And now it's, Friday it finished kind of as an inside day, inside the range of the previous 2 days, actually. So it's compressed, but it's hanging out there in the top end. And of course, fueled by some of those tech stocks that we rattled off. So of the three so far, Qs is definitely looking the strongest, but it's also quite elevated in the last 2 weeks. Now, the interesting one is actually IWM, because that looked like it was going to go down and test sort of that October low, right? Which it never did. It corresponded to the low that we also had on June 15th, 16th there, June 16th to be exact. And so that October low corresponds with the June one. And it looked like we were on our way down to test that potentially, which would have been quite a separation from the other markets. But on Friday, it had a pretty strong rally, and it's, in its 2-week range here, it's discounted in the terms of making a new low in the 2-week period relative. And then it rallied from that point. So that's an interesting one. I would take a close look at IWM, and I would plan for a potential break to the upside. Isn't it not true that the first 2 days of the last 5 days of seasonality are the most bullish, right, Dave?
Typically, yeah.
Right. So if you look at the last 5 days, it kind of tapers off to where it's slightly negative in the 3 days and more so negative on the last day. But the overall 5 days are positive. So therefore, we have to allow for some upside here on Monday and Tuesday, according to seasonality. Mm-hmm. Correct? Okay.
Correct.
So, let's move on through these futures here. Let's talk about energy. Crude is an interesting animal. Obviously, we've talked about the monthly performance has been so bad, but it started to pick up a little bit at the end of this week here. It's looking like it has quite a bit of upside if it can get through the high on March the 23rd, because there's a big air pocket all the way to the center part of a consolidation. So you're sitting at, on the West Texas, maybe about $6 to $7 a barrel potential move there. So that could impact some of the oil stocks. And I've noticed that even though oil itself was so discounted, some of these mid cap and small cap oil stocks have had some pretty outstanding performance recently. So keep that in mind. On the bond side of things, we obviously had a move higher in the last week. We also had a move for the whole month of March. So month of March, let's just think about this for a minute. Financials have had a disaster as a sector, and REITs for the month of March. What did we see in the month of March? Well, starting on March the 2nd, we came out of the hole, which was a new low in bonds for the year, and had taken out December's low and was heading towards, October, November's low. And so we came out of that hole and we rallied sharply on March the 3rd. And then we rallied all month. And then we got volatile with the banking crisis. So what's that saying to you? Well, bonds rally means interest rates go lower. And so in this case, we look at how the financials actually benefited from the rising of rates. And so with a rapid change in sentiment and the bond traders anticipating the Fed is going to have to, back off a little bit, the financials actually perform poorly even before this crisis really unfolded. So remember to watch your bonds and think about how that impacts some of these sectors. Obviously, the one that had the biggest move was the 2-year, but it pulled everything with it. 30-year, 10-year, 5-year, all the same thing, but 2-year was the most dramatic. In the metal category, we pounded on the 2000 level for gold, and that's not high over the last year yet. I mean, March the 9th of 2022, we were up over 2000 and over 2050 actually. So it has a way to go to tackle that sort of 52-week high, which is, well, we're moving past 52 weeks now anyway, but so this 2000 level is still very significant. Silver had a pretty good rally here for the month of March as well. And copper is the one that's tied to recession, and it's had a good rally for the last week and a half, pulled back just on Thursday and Friday slightly. So kind of not signaling imminent recession, actually getting a little bit hopeful that we may have a softer landing and not so much of a recession, especially if the Fed's backing off and maybe even, market's always hopeful, maybe even cutting rates. So how's the dollar doing in light of that? Well, it did have a pullback for, again, the entire month of March from the high that it hit on March the 7th. And it popped up just slightly here on Thursday and Friday. And it's just hanging in here, pretty much not doing anything at the moment, only a down 0.06%. All right, well, hope that helps. Anything else to cover, Dave?
No, just the 10-year is still, we're at 3.38% on the 10-year and 3.78% on the 2-year. Both are down a lot from the high in March. Mm-hmm. And it's still inverted where the 2-year is higher than the 10-year. So that's still like recessionary kind of leading indicator.
All right. Well, it's going to be an interesting week. Fasten your seatbelts. I think there's still other things to come out in this week. And then you also have to watch for companies that give, some preliminary heads up about their earnings. So that starts to happen now. And then in April, we go again into another earnings season. So that's always fun. All right. Have a good trading week, everyone. Catch you later.
Thanks. Good luck.